You have a neighbor who has not slept properly in a month. You see the light on at 2 in the morning. You see him at the traffic lights, thumb moving on his phone, checking something before the light turns green. He can tell you what happened to oil this week. He can tell you what a chairman said on Tuesday. 2 doors down, there is a woman who has not looked at her money since March. She could not tell you what oil did. She is doing fine, and actually rather better than fine. Same market, same year. One of them worked. That gap has a name in one old book, and it is not luck. It is a job description, and a surprisingly short one. Benjamin Graham called the woman 2 doors down a defensive investor, and he wrote out exactly what her job is. By the end of this, you will know what defensive investing actually means, and you will have the 4 rules Graham gave that job, numbered. 4 rules, so keep count. None of this is a plan for your money. It is just how the machine works. Here is the idea everything else stands on. Managing money is a job, whether or not anybody ever told you so. Nobody handed you the contract, and nobody asked if you wanted it, but you have it. And every job in the world pays the same way. You put hours in, and money comes out. Work more hours, get more money. That is the deal at the shop, at the warehouse, at the office. Watch what happens when you carry that deal into a market. You do the same thing you would do at any job, which is show up more. You check more and you read more, and none of it feels wasted. You act on what you read, and your pay goes down. That is the strange part. This is the one job where the pay per hour can run backwards. So the whole question becomes, what are those extra hours actually buying? Start with what the job is. At its smallest, your money sits in 2 piles. One pile is ownership, stocks, small slices of real companies, which rise and fall and pay you a share of what they earn. The other pile is lending, bonds. You lend money out and get paid to wait. It moves less and it earns less. That is it. That is the whole board, just 2 piles. Graham's job description starts with one number. How much goes in each pile? And his answer was deliberately boring. Split it down the middle, half owning and half lending. Then he put a fence around it. Never less than 1/4 in either pile. Never more than 3/4 in either one. Whatever you believe about next year, you stay inside that fence. Now, here is the part that sounds like nothing. Prices move, so the halves stop being halves. A good year for stocks, and suddenly the owning pile is 60% of the money. So you sell a little of the pile that grew. You buy a little of the pile that shrank. You are back at half and half. That is the job. It takes about as long as ordering a takeaway. Twice a year, maybe once. And notice what that quiet little chore is forcing you to do. It makes you sell some of what everyone is excited about and buy some of what everyone is going quiet about. You did not have to be clever. The rule was clever for you.
So what is your neighbor buying with all those hours? He thinks he is buying information. He is not. The oil price is on every screen on Earth by the time he reads it. What the hours actually buy him is decisions. More looking means more moments where doing something feels obvious. And every decision is a fresh chance to be wrong. 10 decisions a year? 10 chances. 100 decisions a year? 100. Mr. Market comes to the door every morning with a price, cheerful one day and terrified the next. The more often you open the door, the more often his mood becomes your problem. Effort is not the enemy. Effort spent on the wrong thing is. In every other job, showing up more protects you. Here, showing up more just widens the door. You could argue that an amateur checking his phone at the lights is not really trying. So look at the people who are paid to try. They have terminals and teams and analysts who fly out to the factories. They do nothing else all day, and they are paid a great deal to beat one simple benchmark, the S&P 500. S&P Dow Jones Indices keeps score on this and publishes it. Over 20 years, about 9 in 10 of those funds finished behind the index they were trying to beat. 9 in 10, with every hour, every screen, every trip to the factory. Something is very wrong with paying by the hour here. And a woman who has not looked since March quietly finished ahead of most of them.
Bring it home for a second and think about your own month. Open your phone and count the times you opened the app that shows your balance. Most people can guess within about 5. Now ask what those minutes bought. Not what they cost, what they bought. Every one of them was a little check on a number you were not going to spend for 30 years. And roughly half of them ended with a small bad feeling. That feeling is the product. That is what the hours are buying. A quiet portfolio with a rule is not lazier than a busy one. It is just a job that ends.
So here is the promise. Paid. 4 rules. This is defensive investing, in Graham's own words from Chapter 5. Rule 1. Spread it, but do not shred it. Somewhere between 10 and 30 different companies. Enough that one disaster cannot take the whole thing. Few enough that you still know what you own. Rule 2. Big, boring, and not drowning in debt. Large companies, prominent ones, conservatively financed. Graham wanted businesses that could take a bad decade without needing rescuing. Rule 3. A long record of paying out. Companies that have paid a dividend every single year for a long stretch. A dividend is a slice of the profit handed to owners in cash. Paying it every year through bad years is hard to fake. Rule 4. A limit on the price. Graham put an actual ceiling on it. Never more than 25 times the average earnings of the past 7 years, and never more than 20 times last year's. Read those 4 again and notice what is missing. There is no forecast. Nothing about next quarter. Nothing about what oil will do. That is what defensive means here. Not scared and not slow. Defended. The rules are the defense, written down in advance while you are calm, so that a frightening Tuesday cannot rewrite them. Your neighbor has no rules. That is why he needs the hours.
So the woman 2 doors down is not lucky, and she's not lazy. She has a job that fits in 20 minutes, and a fence she does not move. Graham did write a second job description, though, for people who want to try harder, for more. He priced that one honestly, and the price is higher than almost anyone expects.